All right, on today's edition of Cedar Harvest, Law Enforcement Edition, you're going to hear part 2 of health insurance. How does it affect you in the personal arena? You're very used to having group insurance and all the benefits that come with being a government employee. What happens when you lose those benefits? Guess what? You're going to be fine. But listen to Officer Ty's questions. They're valid, and I'm going to address a lot of concerns that I'm sure many of you have. Welcome to the Cedar Harvest Show, our law enforcement edition, where we focus on financial education for police officers, law enforcement, federal, state, county, across the board. This is a financial education show for a variety of things that not only affect your life, but also affect your spouse, your children, your charities, and your legacy. We discuss everything from health insurance to pensions, wills and trusts, to the best way for everyday tax planning. Our intention is to bring financial and legal professionals together with everyday people who need their help. We have real conversations with real people, in this case, Officer Ty, who have real questions and scenarios. I'm your host, Mario Lizarraga, and today is part of our law enforcement series. Okay, I'm happy to introduce our co-host, Officer Ty, who is an 18-year law enforcement veteran here in Phoenix. So today we're going to talk about health insurance part 2. If by chance you did see the first episode, we started breaking off questions about health insurance. There's a lot of confusion about health insurance amongst those who are retiring, and today's going to be part 2 of that conversation. It is a very big topic. So I'm happy to continue on where we left off. And just a quick summary and recap of last episode. Basically, we were just trying to take back a lot of the basic questions of retiring officers. It's been made apparent to me that you, a potential retiring officer here pretty soon, one of your big concerns is, what am I going to do about health insurance for my family?
I think that's a big, not just me, it's everybody. That's why, like we've said it before, a lot of guys will work longer than maybe they should because of the health insurance. Like they don't have it's expensive, and it's actually, when you're still working for the city, it's not horrible. But when you're not working for the city anymore, or not working for, whatever the agency you work for, it becomes expensive. And if you don't have it planned out, then
It's definitely going to be a big expense compared to what you're used to.
yeah,
There's no question, any retiring officer I know either is going to tap into their pension immediately, or they're going to have a second job and wait to pull on their pension so they can have a higher pension. And unless you're going to get a job that's going to bring in a separate group plan, you definitely need to consider that being you need to understand that line item expense. It is like a mortgage,
yeah,
right? There's
or a car payment the way things are now.
Yeah, or a car payment. That's
Yeah.
right. It used to be a mortgage, but now it's just equivalent of a car payment.
Car payment.
No, that's totally the case. So, I'm happy to, get a general understanding. Like I mentioned last time, you have no longer the concern about being insurable. Okay, so we talked about that last episode, that it's guaranteed issue, just like if you jump on a group plan at work. With Obamacare available to everybody, it doesn't matter if there's a health concern on the table. Okay, you're guaranteed issue insurance. We have no problem getting anybody insured. It doesn't matter if they're way overweight, in the middle of cancer treatments, type 1 diabetic. It doesn't matter. The insurance company has to take you.
Because that's a big concern too,
Right.
because a lot of, unfortunately, officers and firefighters that's one of the leading I think it's cardiac or what is it? Cardiac related, issues are what a lot of officers die from once they retire. Like their life expectancy is not far.
Yeah, I think I saw it was like 67.
Yeah.
And I was surprised to see that police officers, the average lifespan was lower than fire.
Yeah.
I thought fire guys were lower than.
Well, they get to work out. They get to work out when they're on duty.
Oh, I guess I never thought about that. That makes sense. So that's
Yeah.
gaining them a big extra year, though.
Yeah.
Which I believe right now the average American male lifespan, and I want to say, is like 76. Whereas when I saw for law enforcement, it was like 66 and fire was 67
Yeah.
on average, which was really appalling to me.
Well, I remember when I went to the academy, they told us like that it's like an average, like I think it was like 5 to 10 years that a lot of officers die after they retire, is in that like 5 to 10 years after they retire, because it's not just the like, cardiac and things like that, but it's like the stress, like you spend 20 years, especially when you're working with your stress levels, through the roof, and then
Seeing chaos.
you retire and all those stress levels come down, and it just, your system just can't take it.
That makes sense. Somebody told me also it was like kind of the sleep deprivation. You guys have really bad sleep patterns, and I don't know if how
Yeah, I
much
mean,
that attributes to it, right?
there's definitely there's a lot more research out about this shift work disorder. So guys working like third shift, because that's not a normal time to be
How
up.
many hours would you say you average to sleep? I know you don't sleep much.
I mean, I honestly can get by with, I know they say like 7 to 8, but I can get by probably 6,
But is that what do you average though? Not what
probably
you like.
6, maybe
Yeah.
5 to 6.
Okay, okay. I've heard that you average a little bit lower, but you would know.
Yeah, 5 to 6
Yeah.
is probably,
Yeah, the girls are lying.
yeah.
They're telling me stories about you. Going to bed at 11, he's up at 3, this
I
guy.
mean, I don't know. I try to go to bed earlier than I probably should. Then I shouldn't say should. Then what I do now, I should probably go to bed earlier just because of, I work day shift now, so I mean, I need to be there by 5. So I'm getting up at about 3:45-ish in the morning to get ready and get to work.
Right.
So I probably should be going to bed at like probably, I don't know, 8, 8:30, but I definitely don't do that.
So either way, it sounds like overall you guys have some fairly erratic sleep patterns
Yeah,
and
for the most part.
stress, and there's just a lot of things that
Poor eating habits, because like especially at night, you work at night,
eating ran
there's not a lot of well, it's not even that. It's that if you're not preparing your food, there's not a lot of healthy options when you're working third
kids
shift.
got a whole
Yeah.
section of carrots and bananas.
Jack in the Box tacos at, 2 in the morning are probably not your.
I never considered that. So it makes sense why there's such a big concern about health insurance, right? And so but again, rest assured, you can definitely get insurance. The only problem is it's going to cost you more than what you're used to.
Yeah.
The other problem that you have to understand is that the network of providers that you have access to through your group plan, especially through the city, you have a great network of providers. You have your insurance plan is a little more robust as far as upfront benefits, as far as like chiropractic care, probably, and things of these up and
Yeah.
PT things of that nature.
Yeah.
And in the private market, you really,
Counseling sessions, that's another big one.
yeah. And so counseling, mental health benefits, rest assured, those are all included. That's part of the Obamacare law.
Yeah.
Is they have to cover mental health, they have to cover maternity, they have to take on all pre-existing conditions. So there's a lot of really good things that came out of the Obamacare law, whether you agree with Obama or not. Let's not
Yeah.
get political. There was a lot of good things that were addressed.
Okay.
And these are things that are no longer a concern to you. So now what's a point of concern is, okay, how much is it going to cost me? Right? That's a real line item
Yeah.
because none of you are going to qualify for the financial assistance that Obamacare is. Obamacare is not an insurance plan. It's a government of financial assistance program to people to help make health insurance more affordable.
Okay.
Okay. Health insurance, the cost of insurance is still determined by the health insurance company. The
Okay.
government has basically said, hey, John Q. Citizen, we only want a certain percentage of your income to be paid towards the cost of health care. Okay.
Okay.
That's what they basically made this kind of general understanding of. And so, depending on your house, how many people are on your tax return, your household size, okay, and your age, that's going to determine the cost of insurance for your family,
Okay.
your household. And and then they're going to factor in how much you're bringing in. So, depending on how much you're bringing in, is what's the government saying, hey, we'll help subsidize that. That is what Obamacare is. It is not an insurance plan. So for those people who financially qualify, it's fantastic. For those who don't, it's less fantastic. The fantastic side in this case is that you're going to get coverage. The downside is it might cost you quite a bit. Like I'm seeing a 63-year-old that's paying somewhere between $700 and $1,200 a month for just them.
Gotcha.
Right. So if you have two 62-year-olds, you and your spouse are about the same age, it can, you are looking $1,500 to $2,000 in a line item expense. There's that car, small mortgage.
That's a lot. Yeah.
That's a lot. So you just need to plan on it, and you need to factor it in. There are alternatives, right? Some more affordable, some less affordable. And this is where depending on your health, that's what's going to drive and force your hand one direction or another. If you run into a broker like me, I represent a lot of carriers on exchange, which is healthcare.gov, Obamacare, or off exchange. I have a lot of options, but what I can offer to place you in is going to be absolutely driven by your healthcare needs. If you tell me I have to keep this doctor, this doctor, this doctor, it's gonna paint me into a corner for what
Yeah.
options I have for you. If you tell me I have to have this prescription, that prescription, all these different prescriptions, again, it's gonna eliminate a lot of plans who start to strip out the benefits. So those who are healthy are gonna spend less in healthcare costs. Those who have more ailments going on absolutely will spend more for a plan. There's
Yeah.
no question. But let's talk about the liability in the plan, because
Okay.
I know per our last conversation, that was a real point of confusion, right?
Yeah.
And you're not alone. That's everybody. That's the
Yeah.
world at large. Nobody understands how these health insurance plans work. So let's talk about that. Now that we know you can get insurance, okay?
Okay.
And now okay, I can afford it. Okay. I'm getting my pension coming in. I'm doing off duty work. I've got my second business, whatever.
Yeah.
You're able to make the extra money to pay the extra $1,000 a month that it's costing you to be free from the police force,
Yeah.
right?
Yep.
You got that covered. Now you're within your plan. So let's get in and dive deeper a little bit into how these plans work. Okay, so most of my clients get really confused about these three different things: deductible, coinsurance, out of pocket maximum.
Okay.
Okay. And I think we kind of surfaced last time that you were kind of confused with that too.
Yeah.
So everybody seems to perfectly grasp deductible,
Yeah.
right? You're on the hook for the deductible first. Okay. So again, let's talk about, let's pretend we have a $2,500 deductible plan, 80/20 coinsurance, 8,000 out of pocket maximum. What in the world does that mean? Right? Most of my clients don't know that. So basically, let's say you, heaven forbid, you got in a car wreck.
Okay.
You're laid up in the hospital for a couple days. Boom, $100,000 worth of bills. Okay. It's your fault. You turned left in front of the car, caused the wreck. Right.
Yeah.
So you're not getting any help. It's on you. Right. Insurance company or car insurance might jump in a little bit, but let's just assume that the auto insurance is not jumping in on any kind of damages. Okay.
Okay.
So let's just talk about this $100,000 worth of medical bills. So obviously you're on hook for the first what? 2,500, the deductible,
Yeah.
right? You're in a $2,500 80/20 plan with an $8,000 out of pocket maximum.
Okay.
Okay. So now all of a sudden we've applied the first 2,500, you're on the hook for. That leaves a balance of 97,500. You're in an 80/20 coinsurance. And now you're in your coinsurance phase, right? So how much of that 97,500 is your responsibility?
Well, as I say, that's where I think where the issue came last time, because I thought it was still. I'm trying to think because we had kind of an example last time, but if I'm assuming I understand right, it's just up to 8,000. That's the most I'll have to pay.
That's correct, right. So most people would say, "Well, I owe
But I didn't know that last time.
Most people would say that 20% of 97,500,
Okay.
right? Most people would say, so that's roughly whatever, 20% of 19, not everybody has that, can do the math. So 90, I'm going to owe $19,000 more,
Yeah.
right? And so
On top of the
on,
2,000,
on top,
2,500.
correct. And that is absolutely incorrect, right?
Okay.
So you're on the hook for 20% until that 20% value in combination with your deductible reaches $8,000.
Okay.
So the formula is deductible 2,500
Yeah.
plus 20% until another 6,500 in bills. That 20% equals another 6,500, which those two together make 8,000.
8,000.
Oh, excuse me, 5,500. I can't do math. To the next
Yeah.
5,500 worth of coinsurance, the 20%. And then it's at 8,000. Then the insurance company covers 100%. So it didn't, and if you go back into the hospital because there was complications and you got whatever, you have another couple weeks because of whatever happened from the complications, you've already fulfilled your 8,000 out of pocket maximum. Everything else is covered 100% for the rest of the year. So the plans do start over in a calendar year. Every year they start over. So you're not going to have any additional healthcare costs, co-pays, medications. You need any procedures done, any outpatient surgeries, anything like that. All covered 100% once you fulfilled your $8,000 out of pocket maximum.
Okay. So, but like you're saying with that, so that means like if I had the whatever we'll just say fiscal year is in December. So if I had it like November 20th, and then I paid my 8,000, but then it resets. I'm not having to start over again. It's like,
You're starting over January 1st.
gotcha.
I have seen people have accidents December 30th.
So would you saying that then I'd have to go up to another 8,000 then before it would.
Correct.
Okay.
So you can potentially be on the hook for another $8,000 that next year.
So timing wise, depending on what it is, it could be a little, I
A
mean,
lot more expensive.
still not as expensive, but it's still.
Here's the thing about it. What intrigues me about it, we are all so quick to run out and finance a $40,000 car,
Yeah.
$20,000 car, whatever. We will go out and buy a car, buy a sofa, finance it all day long. We have no problems with financing stuff. And what people don't realize about that $8,000 is they're going to put you on a payment plan immediately. If you can stroke a check, fantastic.
Yeah.
They'll negotiate that down. They'll probably take less than $8,000 if you can just pay them cash. They're fully prepared to say, "Hey, Officer Ty, no problem. We'll put you on a payment plan. Just give us $500 a month." Right?
Okay.
So this is where I try to talk people off the ledge of saying, "Hey," because everybody comes to me, "I want a low deductible plan. I want a low out-of-pocket maximum." Well, no, you don't. Because what the insurance company is going to do is jack up your rates in monthly premium.
Yeah.
And so you're basically banking on being unhealthy when statistically speaking, you're not going to use this plan to max out.
Yeah.
So keep the money in your pocket. Keep that extra $200 a month in premium. Do a higher deductible. Heaven forbid you have an incident. Well, you have a stop loss in place at out-of-pocket maximum. And at that point in time, well, then start paying your extra $200 towards the payment towards the bill that you've created over at the hospital,
Yeah.
right? Why pay upfront for a bill that you don't have? And this is where I truly believe that most health insurance companies have created these products based off of confusing us to get us fearful of the unknowns.
Yeah.
We all say, "I want the low deductible,"
Yeah.
right? Give me the low deductible.
See, but like I said, like we talked about last time, I didn't know about that, like that other limit, like the, like with this
Out of
example,
pocket max?
yeah, I didn't know that. So
Nobody does. So don't feel bad with that. Anybody that's coming from the group insurance arena, the government employee that's always been on group insurance, you guys don't think about it because you haven't had to think about it.
yeah,
It's part of one of the benefits of becoming a government employee is you typically have had strong benefits, right? So you can take that worry off
yeah,
the table. Unlike most of us in the private sector, self-employed, been a big part of our life always.
yeah,
And so we've had to figure it out sooner or later. But along the way, we've wasted so much money buying out of fear until we finally have a situation right. Oh, there's an out-of-pocket maximum. Oh, I didn't need to pay extra for maternity.
yeah,
Oh, you know what I mean?
yeah,
So, so don't feel bad. Is my point. Don't feel bad at all. It's terribly confusing. Find a good broker. You're always welcome to reach out to me. I'm here to answer questions. There's a lot of great insurance agents out there, health insurance agents. Find somebody who's been in the business over 10 years. The only way that they've been in business over 10 years, you, they've had to do a good job by their clients,
yeah,
right? Not to say the rookies aren't doing a good job. You just don't, you have a lot of people that fall off early on.
yeah,
So it's more of a crapshoot of knowing are they a good broker or not good broker. You've run across somebody who's been in business 10 years, you can rest assured they've had to keep clients happy and on the books to stay in the game,
yeah.
right? Because if they're not answering phone calls and they're giving bad guidance, well, people leave. So they're probably not a good broker.
Okay,
All right. So that's kind of a benchmark that you could say.
okay,
Because other than that, how do you know?
yeah. You
Right?
don't know.
You just don't know. I mean, it doesn't matter what industry. Good cop, bad cop. We all we see people do the right thing 98% of the time. That 2% we see terrible things.
Yeah.
There's just it is what it is. So let's see. What other kind of questions pertaining to health insurance can we address at this point? One of the things I think that maybe should be addressed is dental and vision.
Okay. Yeah.
Because you guys, obviously, I would assume your hearing's got to be shot, shooting guns. I mean, you surely can't.
Well, if you don't have protection, if you're not wearing like ear protection, yeah, you're gonna ruin your ears. And if you happen to unfortunately get into a shooting while you're working, you're not wearing ear protection when that happens. So
Those sirens.
yeah,
You're out there in and then there's a siren. What happens when the ambulance pulls up blasting?
yeah.
You guys surely have got to be exposed to some hearing
Well,
loss.
a lot of guys wear earpieces in there. I wear one at night because just it's kind of a safety issue, officer safety. But a lot of guys will wear earpieces. So
Oh, okay. So you guys are proactive.
yeah,
The force, a lot of people are proactive at recognizing you're around a lot of loud sounds.
earpieces as in like with like my radio, so that way it's not broadcasting out so people can hear it. So officer safety wise, I'm the only one hearing stuff that's coming across the radio, but it's also in one ear, and depending on how loud you keep it, it could be ruining.
Oh, I didn't think about that. So you
Yeah,
constantly have an earphone in
yeah,
there. So if it's
yeah, it could be.
that's
And if you have it turned up high, it could be, damaging.
okay. So let's talk about that a little bit, pertaining because this is another point of confusion for people. So hearing aids are not part of your health insurance.
Hmm.
Okay.
Okay.
Yep. You're right. So health insurance will kick in at certain points. Like if you were to have an accident,
Okay.
right? and then you would have an ear damage from an accident type situation. But outside of that, just from normal everyday hearing loss because you went to Van Halen and blasted it out when you're 16 like I did, and I'm partially deaf from listening to loud music as a kid, my health insurance plan is not going to cover my hearing aid, right?
So
And I
for
need
you or for like an officer?
I'm talking for anybody in the private sector buying
Okay.
a private plan. When you
Okay.
leave, you're
So when you leave, okay. When you saying when we leave,
I do not group plans can vary. So when you're with the department, you're gonna have the group plan that they've created for you that you've aligned that the company not the company, that the government aligned themselves with the Blue Cross Blue Shield plan
yeah.
or United, whoever you're with.
Uh huh.
There are times where they will bring in additional added benefits,
Okay.
okay? And so the right now what we're talking about is when you retire, when you leave out of that bubble, what do you have on the outside?
Gotcha.
Okay?
Okay.
So everything I'm saying is gonna be in that situation.
Okay.
So I'm assuming you've retired. Now all of a sudden you're like, "Hey, I need hearing aids. I need to get
And
a
they're
hearing
not
check."
covered.
Hearing aids are not covered. You can get a hearing test sometimes, certain plans, right? So there is separate insurance in many cases to help cover that, but typically most plans do not cover hearing aids. So same thing kind of goes with vision. Vision is also not covered. So you have to have a separate vision plan. Dental insurance not covered, right? Separate
Yeah.
dental plan. So these plans are out there. And it just and now I'm even seeing plans that are covering all three. They bring benefit for audible, visual, and dental. I'm seeing that becoming a little more common in the marketplace,
Yeah.
and so it's bringing a little bit of benefit, but even still, none of them are like true, like full-on insurance. They're what are called indemnity plans, more or less, meaning that they have a limit to what they're gonna cover.
Okay.
So even on a dental plan, you might buy a dental plan that says, "Hey, well, we're gonna cover 2 cleanings a year and a few other things at the basic level services," but your major services, like a root canal and things like that,
Or like an orthodontist appointment or something.
anyone orthodontia is off the table. There's nothing for orthodontia, very few plans. I mean, that's
Yeah.
almost non-existent. That's a unicorn. There are hands
So like your braces and things like that are not.
yeah, anything cosmetic is done, right? This is more for cavity fill, pain, root canal.
But that's only
The
for like I'm retired and looking for it.
I'm not talking about what you have access to within the department.
Okay.
Okay, 100% outside the department. You've retired.
Okay.
All right. So when you get out there, the dental plan you're looking at is going to have a limit, and I'm sure your dental plan likely does as well. You know that you currently have. I'm sure has a
Yeah.
limit to what they're going to cover, and a limit in the sense of a dollar figure limit.
Okay.
So many plans have 1,000, 1,500, 2,000. Occasionally, you'll find a 3,000 limit, but that's pretty rare. Plan. But what they don't tell you is that they say, hey, this includes cleanings, right? You get 2 cleanings a year, and you have a $1,500 cap total that we're going to pay. Well, those cleanings accrue towards that $1,500. Right. So if the cost of paying the dentist was another $200 per cleaning, well, now all of a sudden you're $400 in. You go to get that root canal, right? They're going to try to charge you 2 grand. You're like, oh, good. Well, I have $1,500 worth of coverage. It's only no, you've already burned $400
Hmm.
of that,
Okay.
right? So there's just little things with these plans to be aware of, and so there is the dental plans. I believe in them because they will make sure that you get your money out of them if you just get your teeth cleaned.
Yeah.
Right? Just get your teeth cleaned and you're even at that point.
Okay.
And then anything above and beyond, it helped offset your costs. I mean, if you're going to get new tires on your car, wouldn't it be great to get $200 off your tires? Hell yeah.
Yeah.
So that's where you have to look at it. I mean, it's a line item cost. You know you're gonna have to get tires. Who wouldn't like getting some of their costs offset? And that's what dental insurance kind of is.
Yeah.
It's maintenance. It's coming. It's keeping track of your teeth because the teeth are the direct connect to your heart. Right? A lot of people don't understand by keeping a healthy mouth, which is where all the bacteria really
Yeah.
festers, and then all of a sudden
A whole other
a
conversation.
whole lot of heart disease comes directly out of our mouth.
Yeah.
So it's to your benefit to stay healthy. So a lot of tricks. So vision insurance, let's just talk about that really quickly. So vision insurance is similar to dental in the sense where it's going to come with a cleaning included, right? They say it's cleanings included. And then from that point, they're going to say, well, we're gonna give you a benefit for $100. We're going to include some basic frames and basic lenses,
Okay.
right? And then
Yeah. Yeah.
if you need them,
If you need them.
if you need them. So you get in there. So they're going to let you go in there and get tested at no additional cost, right? Other than your premium. They're going to cover the cost to go to Costco, Walmart, wherever you like to go.
Yeah.
Likely a lot of these plans. You get your test. They come back. Oh, you need some bifocals. You're nearsighted, whatever. So the plans a lot of times will cover again basic lenses, basic frames. or they'll give you an allotment, say $100 towards frames of your choice.
Okay.
Because some of those frames are pretty
Yeah.
expensive out there.
Mhm.
So that's kind of how it works in that arena. Or you can apply a couple $100 towards contacts, right? But it's not like comprehensive. Like we're going to cover all of your cost of glasses. We're going to cover a year's worth of contacts. So just be prepared. That's just another additional cost,
Okay.
right? So there's just tricks in this arena. Again, this is why it's real important that you have a good broker to help teach you these tricks. I'm going to encourage a guy like yourself to get into an HSA so that way you're putting pre-tax money in your plan. Beyond the cost of your health insurance, but you're nestling money away, getting a tax deduction today.
Yeah, that's what I have right now.
Perfect.
To say.
And that way, when you do go to get the frames, you're using pre-tax dollars to pay for it. When you
Yep.
go to get your dental work done, pre-tax dollars to pay for it, right? But not everybody understands the HSA, so you again get a good broker to explain why an HSA is so powerful for you.
I mean, honestly, I still don't understand them 100% too, so maybe that can be another.
Okay, so
Because I actually would like to know more about HSAs because I have one now.
let's cut it off at this point, and guess that's a wrap. Another one down.
Another one down.